even right now, people talk about, what has BlackRock bought 6 billion of Bitcoin and all these new ETFs. What have they bought? Like 1% of the supply. Well, that means 99% of the supply and 99% of the beneficiaries so far are the non ETF holders, right? I mean, there's 100x as much. But if Bitcoin's up $10,000 a coin since this happened, well, that benefit accrued 99%, right? That's a $200 billion improvement in the market cap of Bitcoin. And of the 200 billion, 99% of the 200 billion accrued to people that don't even own the ETF, right? So it's accelerating, institutional adoption, and it's just accelerating Bitcoin adoption and empowering everybody else in the ecosystem to do all the things that they want to do.
In today's video, Michael Saylor dives deep into the world of Bitcoin and its skyrocketing future. Michael shares his view on Bitcoin, the impact of BlackRock's involvement, and how he thinks that Bitcoin ETF is a game changer. Wait a minute, everyone. Welcome to Bitcoin Zella, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. Bitcoin Zella offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with Bitcoin Zella. Subscribe now.
If I take hundreds of billions of dollars of cash and I buy the ETF, like S&P ETF, the ETF has to buy all 500 stocks pro rata, which means they're going to have to go buy Tesla and Apple and Google and Meta at any price. They're price insensitive, even if they're overpaying. So when they buy it at any price, what they're doing is they're creating more equity because they're encouraging those companies to issue more stock. And then, of course, uh, this is common sense. If the price of your stock doubles, the employees in the company with stock options, they sell the stock, right? They sell the stock option. When they sell the stock option, you put more stock on the market. So the price creates supply. There's a price supply elasticity there. And that's the same as you have with commodities. It's the same as you have with REITs, real estate investment trust. And it's the same thing with bond funds. When you have capital flows into all those other asset classes, you create supply of that asset. They're not scarce. Bitcoin's unique because no amount of capital flowing into a Bitcoin ETF is going to create any more Bitcoin. What we've got is 900 Bitcoin a day. And around April 16th to April 18th of this year, we're going to go to 450 Bitcoin a day. This will be the halving, but it will be the single most consequential halving in the history of Bitcoin because you're talking about it's the equivalent of someone coming in the market saying, I'm going to buy $8.5 billion of Bitcoin a year for the next 4 years, guaranteed. That's the demand impact, right? $8.5 billion, $23 million a day at the current price. Now, that's a huge amount, but more importantly, that's a huge demand supply shift in the year when the demand via the ETFs has jumped by a factor of 4 to 10 times the daily supply. So what you have is institutional capital entering, and then you have the supply getting cut in half. And what happened with these ETFs? Well, here's what happened. The approval of the ETFs was a pretty concrete endorsement of Bitcoin as an asset class by the regulators. And anybody who's thinking about banning Bitcoin or not approving Bitcoin ETFs, they're now out of consensus. So it really flipped the global consensus from, well, maybe it's too good to be true, maybe it'll be banned, maybe it won't be banned. The approval of those ETFs meant that it doesn't matter who wins the 24 elections. It's taken the future of Bitcoin out of the hands of the president. It's taken it out of the hands of the next head of the SEC. It's taken it out of the hands of most regulators in the world. We pretty much opened Pandora's box or crossed the Rubicon. It's very concrete at this point. And it was uncertain, right? Before, And so that's a very big piece of regulatory clarity.
Bitcoin is gearing up for the February monthly close with BTC priced action at a crossroads. Can the highs hold? Still above $50,000, the largest cryptocurrency has lost bullish momentum over the past 2 weeks. Hopes of an attack on higher levels remain for some, but reality appears to be catching up with sentiment as buyer pressure fails to overcome some parties' appetite to sell. The coming days are all but guaranteed to upend the status quo. Key United States macroeconomic data will combine with a classic volatility source in the form of the monthly candle close. The macro landscape is in itself precarious. Inflation recently beating forecasts has left a question mark over future Federal Reserve actions and whether risk assets will enjoy benchmark interest rate cut anytime soon. For Bitcoin, the timing of this is especially pertinent given its own internal dynamics, with the next halving creeping ever closer.
So the launch of the ETFs, it's been very successful. This is the ideal type of asset to put into an ETF wrapper. It's definitely it's the global asset. It's the biggest brand. Everybody knows what it is. It's actually the best thermodynamically sound investment. It's got the best historic performance. And of course, it doesn't have the entire array of risk factors that a company has or that a bond has. It doesn't have credit risk. It doesn't have corporate execution risk, and it doesn't have currency devaluation risk, and it doesn't have the physical risks of real estate. It's not going to ever get hit by a bolt of lightning. There's not going to be a tornado. It doesn't have maintenance decay. It doesn't have property tax risk. It doesn't have the political risk. Right? Ask yourself the question: you got $1 billion, and you got to buy some real estate in Africa. Where? And where do you want to invest $1 billion in a building? What country? What city? Where? Or you can buy Bitcoin. And of course, so you can see this is a higher quality thing. Uh, what was Bitcoin's number one liability coming into 2024? It wasn't the risk. It wasn't the thermodynamic risk factors. It wasn't the technical capabilities. The number one risk factor of Bitcoin coming into 2024 was a government would ban it. But see what just happened in January? The opposite, right? So most of the FUD around Bitcoin is, oh yeah, it's too good to be true, and because it's too good to be true, the government's going to hate that you bought it, and they're going to take it away from you. And with the approval of these ETFs, it was the government of the most powerful country in the world, the United States, which is actually the leader of financial regulation. I mean, whatever the US does will influence Singapore, Australia, New Zealand, all of the EU, even Hong Kong, even China for that matter, and all of South America and all the African regulators. So everyone's looking to what happens in the United States. This was a very powerful signal.
Expect more demand and more new funds. The new wave of Bitcoin ETF makes it easier than ever for investors in more traditional assets, such as stocks and bonds, to dip their toes into crypto. Instead of having to open a separate account to buy crypto, often with high trading fees, investors in the ETF can hold Bitcoin right alongside their other investments in their brokerage accounts. That's just the beginning, says Matthew Seigel, head of digital assets research at VanEck. We think it was a huge step forward that will unlock significant demand, given the cost savings for the retail buyer and security available to institutional purchasers, he says. The new ETF will soon allow advisors who deal with high net worth clients and big money institutions to start incorporating crypto into their portfolios, he adds. And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. Not know why you haven't subscribed yet? If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.